Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Carlos Pelaez. He is the ETP Product Manager for Nasdaq US ETF listings. We also have Simon Goulet. He's a co-founder and vice president at Blue Tractor. We're going to discuss active semi-non-transparent ETF product structure. It's one of the most innovative in the ecosystem. Guys, it's great to have you both with me. And the active semi/non-transparent ETF product structure, it's been one of the most talked about and exciting innovations recently in the ETF ecosystem. Simon, I'm going to kick it off with you. Can you give us an overview of this type of structure and why it's so important?
Sure. Thanks, Jill and Carlos, for having us on today at Trade Talks. Delighted to be here. I hope everybody's well as well. Yeah, the ecosystem really for these active wrappers exists for one fundamental reason: to permit active portfolio management within an ETF wrapper, but without the requisite full daily portfolio disclosure that is the current case with all transparent active ETFs. In other words, issuers and investors accrue the benefits of an ETF, but the portfolio manager can hide their so-called secret sauce in terms of their portfolio trading strategy from prying eyes. As the slide shows, there's 5 approved ETF active wrappers today that the SEC have approved, actually only in late 2019. There's Presidian, there's New York Stock Exchange, Fidelity, T. Rowe Price, and of course, Blue Tractor. There actually is 2 more pending from Eaton Vance and Invesco, but they're sort of relatively early in the SEC approval process. 3 of these wrappers are available today for license: Presidian, New York, and Blue Tractor. Fidelity and T. Rowe Price are primarily focused internally at this current time, based on my knowledge. Really, the best way for listeners to triage these wrappers is to focus on construction of the creation basket. 4 of them are true non-transparent wrappers because their creation basket is either cash in the case of Presidian, or their proxy portfolios in the case of Fidelity, New York, and T. Rowe, meaning that they substitute securities in the basket for ones that are actually in the portfolio. Only Blue Tractor is very highly transparent, meaning that our basket has all the names, but we vary the weightings. And we believe this transparency offers material benefits to market makers and issuers that I'll talk about later. Another point of comparison from the slide is that only Presidian has required a new piece into the ecosystem called the APR, the Authorized Participant Representative Account. Finally, kudos, though, to both American Century and Presidian for launching earlier this month their first active ETFs. We're delighted that they got out the mark so well, and I expect you'll see more and more wrapper structures come to market as market uncertainty abates.
All right, and Carlos, from the exchange perspective.
Yeah, sure. So first, thank you for having us, Jill and Simon. We're delighted for you to be joining. So Nasdaq is excited for this type of product, specifically because it's bringing an expansion to the type of investment vehicles that investors can find listed on exchange, the E part of the ETF, if you will. So just a little bit of history. Looking back, there's different iterations of this type of structure. You can start with Vanguard, who has used their patented share class structure in many of their ETFs, where they reveal holdings on a month-end basis with a 15-day lag. And then more recently, we saw NextShares ETMF structure launch on NASDAQ almost 4 years ago to date. And now even more recently, as Simon mentioned, the recent launch of the Presidian Active Shares by American Century and the semi-transparent or proxy type structures like Blue Tractor that have been approved by the SEC and are gearing up for launch soon. So the winner in all of this is the end investor because they have more investment structure optionality.
All right, and Carlos, why will investors benefit from this innovation type of structure? And Simon, I'll ask you to follow up to that.
Yeah, sure. So we think it's pretty straightforward. The semi/non-transparent active strategies can now benefit, as I mentioned, from listing and trading on exchange. So that means investors gain the benefits of the ETF wrapper, like intraday liquidity, tax efficiency, lower cost and expense ratios, as well as many of the other benefits that generally lead to a better experience for investors using ETFs.
Exactly. I echo those words, Carlos. You know, at the end of the day, there's a lot of active managers out there, some very excellent ones, that are going to feel empowered to bring their strategies to the market with these wrapper structures, because, you know, the net result for them is that they can cloak their alpha generation strategies from prying eyes and avoid issues of front running, et cetera. Now, it's true that there are some great active managers. Think Chris Davis and his team at Davis Funds, Kathy Wood at ARC, who don't seem very concerned with full daily portfolio disclosure. But the reality is that most portfolio managers are, and these wrapper structures give them that ability to come to market.
And Simon, can you walk us through some of the additional work to be done on getting these products to market, and as well as key milestones or events on the horizon that could potentially catalyze this product structure?
Sure, would love to do that. There's really four sort of buckets of questions or concerns that we often hear when we're talking to potential issuers. There's a regulatory burden and operational requirements to launch, the capital markets especially, and the distribution. And I'll touch on all four of these really quickly. On the regulatory side, we designed our license to use what's called a short form application. So issuers can get to the SEC very quickly and hear back and get approved fast. We're talking months rather than years. On the operational side, if you're concerned about the administrative, the accounting, the compliance, consider a white label series trust issuer. That may be the way to go. And we're talking to all the parties that offer these services as well. On the capital markets side, that can be a black hole if you've never dealt with an exchange listed product before. You must get in front of these people because they can make or break your ETF, and because they're the ones that trade this every day in the primary and secondary markets. Blue Tractor will help you with those introductions. You'll meet these people when you work with us. And finally, on the distribution side, the platforms, the wirehouses, the independent broker-dealers, they need to be educated about these wrappers so that they can get comfortable when you come to them with your actual investment strategy. On the Blue Tractor front, we are having conversations today with all the major parties on the wirehouse side and the broker-dealer side to make sure that when you come to them with your actual strategy, you're up to speed on the actual wrappers, the wrapper from Blue Tractor. In terms of catalysts looking forward, there's a couple or two or three that really come to mind. Number one is that there's been a lot of buzz about this whole issue of mutual fund to ETF conversion. Can that get done? And all the 40 Act law firms are focused on that today. And I expect a couple of fund complexes to make that jump very soon. Finally, the exchanges are working on the listing rule frameworks for these wrappers, and we're really excited that this is taking place. As this will streamline the whole process. And finally, the market volatility will, if it continues, the year of 10 years of rising bull market, will that continue? We don't know. We can't predict the future, but active management should shine in a market environment where there's more volatility. These are at least three catalysts we see coming forward, Jill.
All right, and Carlos, if you could follow up to that.
Yeah, sure. So I think it's important to mention what Simon just talked about, the exchange listings rule. So Nasdaq is hoping to have that kind of filed and completed in the near future. And I'll kind of keep the exchange lens on around liquidity provisioning for these types of products and how that could be a catalyst. So traditionally in ETFs, having full transparency has helped market makers price ETFs efficiently. Because this structure, the portfolios are not fully transparent, market makers are going to have to look at providing liquidity slightly differently. And that's not a bad thing. I think our team here at Nasdaq thinks it's paramount for the market makers, the issuers, the exchanges, and other parts of the ecosystem like Blue Tractor to go out and educate investors and advisor on the structure. That's probably the number one key to what we see as being a catalyst to success. And just to highlight some of the other things that Simon also mentioned is it's important for issuers of these products to develop strong distribution and marketing channels, have the broker-dealer platform support, and to try and mitigate as much operational nuance as possible.
Okay, Simon, what does the future look like for these active wrapper structures?
Great question. Currently, the current exemptive relief from the SEC is basically limited in terms of the investable universe to domestic equities, all cap, small, mid, large cap, and other exchange-listed products, ETNs, ETFs, futures, those kind of things. Now, four of us do have the ability to trade contemporaneous foreign equities, so think Canada, Brazil, Mexico, etc. But in the future, all of us have now applied to expand the investable universe to include foreign fixed income, true foreign equities, think Europe, think Asia, think Australia, and also derivatives, and also very interestingly, custom baskets that will truly empower managers to offer greater tax efficiency in these wrapper vehicles. We also expect to see a quicker SEC approval process for all these structures as they become more comfortable and the listing rules on the exchanges become more mature. And also you'll ideally see reduced spreads in the marketplace as market makers begin to understand, as Carlos touched upon, how they can trade and make efficient primary and secondary markets without full portfolio transparency.
All right, and Simon, we'd love to hear more about Blue Tractor's Shielded Alpha product and any other recent updates you'd like to share with Trade Talks.
Excellent. Thank you, Jill. Yeah, as the slide shows, I want to just touch upon the simple workflow for our true cloud-hosted service. Really, I think we are the only cloud-hosted service that, out there being offered, and that gives some advantages as we try to develop a wrapper structure workflow that offered no changes to the way things are done today. So the PM, she runs her portfolio, actively managed portfolio, no different than today in a mutual fund or an SMA. At the end of the day, her custodian uploads the portfolio to our secure cloud hosted service. In seconds, the algo generates the basket for tomorrow's trading. The creation basket, as I mentioned earlier, holds all the names. So if Apple's in your portfolio, Apple will be in the basket. So a very highly transparent structure. However, the weightings in the basket will always differ. So if Apple's is at 2% in your portfolio, it may only be at 1.8% in tomorrow's basket and then 1.6% the next day and then back to 2.3% the day after. It's this constant changing weightings between the portfolio and the basket that hides your portfolio alpha strategy. And interestingly enough, with the cloud, you can manage, there's tools in the cloud that you can manage the basket for more tax efficiency, lower cost, and to fully hide all your trading. And then this basket gets disseminated by the custodian out to the NSEC, no different than today. It's used for real-time pricing and for hedging and for direct creation and redemption by market makers and APs, no differently than today. In terms of our activity, in January, we announced our first licensee, the Nottingham Company, which is a white label series trust company. We're delighted to work with Kip Meadows and his team at Nottingham. We've inked 2 more deals that will be announced shortly in press releases, and we have a bunch of other term sheets out there now. So there is some momentum at Blue Tractor. We're quite excited by that.
All right, sounds great, guys. We have 1 minute left. Carlos, last comments?
Yeah, just wanted to highlight that the ETF team here at Nasdaq's proud to help lay the foundation for these types of products. You know, whether it's helping educate through the ETF ecosystem through events or great platforms such as Trade Talk. So we look forward to future listings and successful trading these types of products on our exchange, and as well as working with folks like Simon at Blue Tractor.
All right, Simon, we'll give you the last word.
Thank you. Well, thank you. I agree totally with what Carlos is saying about education. For issuers and investors, and the platform is paramount for the success of these new wrappers. I want to thank you, Jill and Carlos, for hosting me today, and all your colleagues at Nasdaq. And please stay healthy as we all get through this virus. Take care.
All right. Simon, Carlos, thank you so much for joining us on Trade Talks. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.